Ladies and gentlemen, I'm your GFX mentor. We're on another week, so just gonna be analyzing what happened and possibility what to look out for. So without wasting your time, just cancel most of these drawings. Just cancel these, as you can see or as you saw. So when I analyze in this 2D, so as you can saw, we had our structure here. We had our structure here. This was our structure. So we're just gonna put this on the left touches and put here. Yeah, that's much better. So as you saw last week, we said if the market respects this zone, and this is what you call a reversal structure. So it didn't reverse to the upside. It did not reverse to the upside. So what did the market do? As you can see, the market broke this structure. It broke this structure. After breaking this structure, it kept retesting it from the bottom side. So giving us this fake out. So giving us this fake out candlesticks. So based on this, we knew after a breakout and after a retest, like we said, we also said if the market breaks, gonna probably go to the downside. Our take profit was somewhere around here. Our take profit is somewhere around there. Was somewhere around, yeah. It was somewhere on this zone. Our take profit was somewhere on this zone, yes. After the breaker. So we took these selling opportunities from here to here. As I told you, after a breakout retest, you enter. So after a breakout retest, you're just gonna be getting selling opportunities. So some would have entered somewhere around here. Some would have entered around here. If you entered around here and your stop loss is like 85, let me just put 85. You will be triggered out as well. That's our last stop loss. So if you have entered around this candlestick here, and your 55% stop loss is here, or 5 somewhere around here, this 34, but if it's 25, you still have not been triggered out, and your take profit will be here. So as you can see, you'll be risking 25% to get 1:32, 1.32%. So you're getting more. It's like you're getting, I think it's 5. Yeah, it's 5. You're getting 5 from 1 out of 1. So this will be a good trade if you have took this trade. So we took it from there till here. So when the market came here, I personally started looking for buying opportunities, and the market eventually kicked me out. Eventually, the market kicked me out. Let me just put on my 5. Let me just put it 6. So my overall was to go back around here or around this zone, because this was our possible last. This was our possible last retest. So I was looking for this opportunity, so the market kicked me out with a loss. Then I noticed the market start trickling. So this type of setup, once you've been in the market for a long time, you know this type of you will know this type of setup. You know the type of setup. This setup, you can take it from most probably, let me just start here. Because why am I taking it from there? Let me just put it here. Yeah. So it's this spike here and this spike here. So you must be asking yourself, why is he taking that trade from there? Why here? Because after a breakout, this was the last spike for them from the top side. The market retesting the support from the top side. From the top side came, retested this support. Then our support became resistant by what? By these spikes. So this was our last spike of the retest to the from the downside, from the downside, going to the upside, which is our support. This is our support. This will, after a breakout, this will be our resistance. So that from there, the market retested from the bottom side and retested our resistance and continue going to the downside. That's why I took this last retest, this last spike, and matched it with this one. I saw it still did not break even after this spike. Sometimes you can, yes, still take this one. Even this one is much clearer. So if you're looking for this, that first entry, that's pinnacle, that first move. So usually I take this trade based on this. So I always, that's why you see me, so most of the time I get those sniper entries. I get those sniper entries because I get those sniper entries because I enter at the beginning. Most of the time, my strategy allows me to enter at the beginning. My strategy allows me to enter at the beginning. You see, after a breakout, the market triggered. So when we entered here, when we enter here, when we enter here, and we put our stop loss 25, even 80, 25, you can see the reason why we were able to profit. So this is why we were able to profit. We took this trade going to the upside. So this was a nice entry going to the upside. So for now, for the week ahead, we'll still be looking for those buying opportunities. For me, depending on the market, what will happen next week. But as the way it is, I'm just gonna cancel this. I'm just gonna cancel this and cancel and try to show you something. So let me just take this thing and put it on here. So if you take this thing, this trend line, if you take this trend line and put it here, if you take this trend line, just put it on these last touches, and then you just take this one, put it there, and just put it here. I won't do so. Even here is fine. You can see the reason why we do this. We want for you to see this was a falling wedge. This was a structure. So in this structure, what did the market do? The market broke the structure and broke our previous resistance, turning into our previous resistance turned into a support and turned it to a support. So sometimes you might just if you like, sometimes you just might just cancel it. So if you don't see it as a necessity anymore, you might just cancel it, and the market most likely will come retest this zone. It most likely might come and retest. Market might just come the market might just come retest this zone and continue to go to the upside. But at the same time, the market can respect. As you can see, this will be touches here, and this was a touch in the group. So let me just put it back. Let me just put it back. As you can see, if the market continue, it just might respect this zone again and continue to go to the upside. You know what I mean? This is just too much. Just too much. So that is just too much. So let me just fix it. Yeah, plain and simple. So we'll be looking for those buying opportunities once again, depending on how the market opens or how the market is starting to play out, and we see those changes. So we're gonna react to all those changes. So this is my analysis on US30. So let me just go to my GER30. Let me just go to my GER30. Cancel this. As you can see, we're still looking for those buying opportunities, but the market, what did the market do? The market triggered us out. Even we put on a stop loss on a 40%, but it still triggers us out. But because sometimes you know what the market will do, sometimes you have to trust your strategy, guys. So let me just cancel this. Cancel this. Sometimes you have to just trust your strategy. You can see it rejected here. So if you have closed your entries, or your account wasn't able to handle the drawdown of the market, sometimes you get affected. But because we knew what the market would do, so you basically just had patience, and we won this trade. So let me just put this thing here, and just put you how. So as you can see, the previous market structure, the market, after giving us this type of formation, what did the market do? Market gave us a breakout, retest, give us a retest, and the retest, sometimes you will be able to catch it, sometimes you won't be able to catch it. So if you have catch this entries, that's most likely perfect, because you will only catch this trade based on these based on these touches. As you can see, the market touch here from the bottom side. Now, after breaking our resistance, it turned into a support and went to the upside. After giving us those bullish movement, it came back to breaking again. So when the market, after doing this, so the possibilities of the market coming to retest this zone again, then you'll be able to capitalize on these nice movement. Even put your stop loss in the 5, and just put it there and go there. And these guys, sometimes some of you will ask yourself, how would you know if the market might just come to this zone? This is what you call your 90% rule. So I just capitalize on my 90% rule. This is just the 90% rule. You have to go get it and Google about your 90% rule and see what will your 90% will give you. So after our 90% rule, what did the market do? We know what the market will do. It start trickling on this zone. Start trickling on this zone. It starts trickling on this zone. Take this back there. After the market, based on these touches. As you can see, these are nice touches. These are just beautiful touches here. These are just those beautiful touches. So as you can see, this is your double bottom. So after we notice that the market is giving us some sort of a double bottom, we just entered. After it break, we could just continue entering. So our possible movement, we're looking for those buying opportunities. We just be looking for those buying opportunities. And I think trigger. You know how long it will take. Then it will give us those buying opportunities. Or the market just might decide to reject at any place. The market just might reject at any place and just might decide to come here, give us a retest and continue to the upside. So depending on the market, how the market opens, that's when we be taking our trades, depending on our market or the market how it reacts to our strategy. That's when we'll be taking all those opportunities just to capitalize on the market. So usually, guys, I basically don't. Let me just try. I basically don't. It's not all the time. Sometimes I trade your Euro USD. So let me just see. Let me just analyze my. As you can see, this was a beautiful trade. As you can see, just capitalize on this nice movement. Plain and simple, easy. This was just an easy setup. So let me just cancel to show you how I started breaking it down. So if I break it down for you, let me break it down for you. As you can see, the market after giving us these buying opportunities, it gave us. Sometimes you don't have to draw your all setup. You just by just one, you can see that what the market do. And usually this is just here and this is there. So just by looking at this, we know that the market was testing this high, and it gave us the first retest and the second retest. So by this retest, we could have already entered. Some of us we have already entered. So which is ours one of them. Usually I'm an aggressive trader. So by this touch, so if I put it on my 25 keeping out. So let me just put it on to 5 because I obviously capitalized on this movement. I was able to capitalize on this movement. Here, I think it was just around this zone. So this why it was this last touch. I just took basically based on this last touch. So just based on these last touches, as you can see, the market we tested here, then broke after broke, it came and retested and went to upside. So this was a huge retest, but it eventually went to upside. So obviously, we're gonna capitalize on that, and let me just give us another structure. So this structure as well, how would you be able to see this structure? If you keep practicing your strategy and keep back testing your strategy, you will see some of these patterns. Some of these patterns are just repeating. They are usually not on these chart patterns. They are new chart patterns. They are just new chart patterns on the market. The market is always evolving. So when the market evolves, you will know after this type of setup, if this type of setup happens, like this type of setup here, you will know, oh, after this type of setup, the possibilities of the market going and shooting to the upside are very high. So I personally was not able to enter from here. I was not able to enter from here to here. I was not able to enter from here to here. But I took, after market breaking, I took these setups because I know after this type of setup, usually the market just continue to go to the upside. So you just continue to create those retest. So after giving us this retest, I know the market. I was able to just capitalize from 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 this zone. From this zone. You must be asking yourself, why does he always enter dates because of a candlestick? Sometimes my strategy allows me to enter without no candlestick confirmation. I personally, my strategy, the GFX strategy, does not allow me, and the software that I use does not allow me to usually wait for a candlestick confirmation. Sometimes I enter, sometimes the market go against me. Yes, and when that happens, it is painful, guys. It is painful. But I know uh, I know 8 or 9% out of 10, if I see out of 10 or 80 to 90% out of 100, my strategy always on point, always giving me those snipers entries. So I was able to capitalize from here till here. Then I exit. I took this just movement, and I exit. Then it happens that the market gave me a continuation. Then that's when I regret ever taking those take profits. So I entered here as well again. I entered here. There was somewhere, I think it was somewhere around here. I took this trade and just went to the upside with it, just took my profit somewhere around these zones. So as you can see, basically, if I would have holding from here and continued with the market, even now, I could have just holding on massive profits. So, but sometimes you just have to take your profits and just leave that one entry so you can that one entry can profit the whole movement. If you take five trades or five entries, then after all of them hitting your take profit, you just close you just close three of them after they've all after the market hits your take profit zone, and you just close your three trades, leave two running so that those two can get those maximum profit. Then you close them with stop loss so they cannot trigger you out. So let me just go. Let me just go again. I'm just gonna let me just analyze USD. I don't usually use Euro USD, but let me just see what has Euro USD has been doing. But it's been a while. It's been a while. It's been a long time. So let's do this. So usually you will see why is it on the 1 minute. I don't on the 1 hourly time frame. So here I don't usually take the 1 hourly time frame. I take the 4 hourly time frame. So my 4 hourly time frame. Let's see. Yep. So after the market breaking these, as you can see, is our first touch, second touch, and the third touch, breakout, retest, revert to the double top, and continue to downside. Oh, this was so beautiful. And with our 90% rule, we could have just profited this night. This is just clear, nice, and we were not able to capitalize on it. And basically, why the market gives us the first touch, second touch, and the third touch. Usually after the third touch, we just continue to go with that market to that direction that it gave us this first touch. And this is our first rejection, the first rejection, second rejection, and the third rejection. So this is just 1, 2, 3 rejections. then this is what you call a triple top, and you continue to go to the upside. So if you will be looking for those M formation, just basically doing this, because the market would have already confirmed, with you. So this will be your double top, after breakout, double top, then continue to go to the upside, downside. So let's just see what will the possibility of the market be doing in our coming week. Okay, let's change our setup. So it was expecting this, so it was the first step in that part. So we just basically move to this one. So this one is the really key one. So so that will be my first time. Second time, when you do this, just come here. And mouse is even more real problem. Mouse, a laptop mouse, or what you call it here, mouse, not mouse. So just because the market is moving inside the structure, and this is some sort of a double bottom, but usually we just be looking for those opportunities of the market just continue finishing, even at the third touch, then we'll be looking for those buying opportunities to finish our 90% rule, give us a 90% rule. But if the market here telling us that yeah, it could be a possible, it could be a possible last touch, or most likely a possible last touch. So if the market would just come in and give us a breakout, retest this zone, we'll be looking for those selling opportunities. We're looking for those selling opportunities until this structure then will continue to go back with it to the upside. So after you do this, but if it respects this structure that is just like one, this is first time, second time, and you just can't get respect and come here, giving us a breakout or retest, and continue to upside. You're just gonna be looking for those buying opportunities after a breakout retest and continue. So this is what we'll be looking for in our upcoming week. So guys, if you like what I always drop for you, kindly like, subscribe to my YouTube channel, and speak to us. Tell us what we can do more better so we can just continue dropping our YouTube weekly analysis on the market. So without further ado, peace out.